And in that case, it's not even a case of like trying to find more trades. That's the opposite.
Oh, let's find less trades.
Yeah.
Let's avoid this, right? Because the more you can avoid that, probably the more
that's the most
profitable.
powerful one. I've always said that's the ultimate hack: is how do you avoid the low quality trades? Because now you make more money without taking more trades.
Without more effort.
Yeah.
Right. Exactly. So the last thing I think we'll talk about on the whiteboard before we jump into the charts is I like to call it the big four correlation. I don't use the fancy terms that you hear a lot. I think it's pretty much the same thing as SMT.
Yeah.
Right. So for me, I call it big four correlation because there's, big four sort of comes from an accounting firm. I just think I wanted to be investment banker, accounting. So big four is like all the big accounting firms. So big four, which for me, the big four is Nasdaq, right? NQ futures, S&P 500 futures, right? The SPY ETF and the QQQ ETF, right? So I am watching all four of these every single day without a doubt. They're in the same chart. They're in the same chart every day. I press one thing on TUS. I got a 4 square on TUS. They're in the same spot every day, right? And I'm just becoming a master of reading these four together because you absolutely spot discrepancies between these four every day. If you know what you're looking for, you find those SMTs. You find that that they're not correlated at times. So a quick example, which we'll get into later on the chart, is what happened actually last Friday. So last Friday, the 25th, I took a losing trade. This was a loss that, could have been avoided, but I did like the setup. I felt like it lined up with what I wanted to look for, but there was a very clear reason as to why it failed. And it was to do with the big four correlation.
Gotcha.
And so I want to quickly show you exactly what happened here.